Based on the historical data and forecast, Bitcoin shows a mixed trend with periods of volatility. The RSI indicates that the asset is currently within a neutral range, fluctuating around 45, suggesting neither overbought nor oversold conditions. The Bollinger Bands have been widening recently, indicating increased volatility. Considering the forecast for the next week, which predicts a downward trend with prices falling from 84,600 to 81,200, I propose a short selling strategy. Entry price will be $84,600, with a stop loss set at $87,000 to limit potential losses if the price reverses. The target price for this short position will be $81,200, aiming to capitalize on the anticipated downward movement. To refine this strategy, I'll incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will cover the short position. Conversely, if the price touches the support level of $81,100, we will also cover the short position. The Bollinger Bands suggest that if the price breaks below the lower band of $81,200, it could indicate a strong downward momentum, and we will adjust the target price to $80,000. This layered approach combines technical indicators with forecast data to create a robust and adaptable investment strategy. Based on the historical data and forecast, Bitcoin Cash shows a declining trend. The RSI consistently falls below 50, indicating a weakening momentum. The forecast for the next week predicts a further decrease in price, reaching as low as $291. Considering the support price of $291 and the RSI approaching the oversold level of 20, I recommend a contrarian strategy. We will enter a long position when the price touches the support level of $291. Place a stop-loss order at $288 to limit potential losses. The initial target price will be $320, aligning with the forecast for March 29, 2025. To enhance the strategy, we will incorporate the Bollinger Bands. If the price breaks below the lower band, indicating increased volatility and potential for further decline, we will adjust the target price to $300. Conversely, if the price rebounds and touches the upper band, it signals a potential reversal, and we will move the stop loss to $308 and adjust the target price to $340. This dynamic approach allows us to capitalize on short-term fluctuations while mitigating risks associated with the downward trend. The final portfolio will be a blend of the RSI and Bollinger Band strategies, with a support level of $291 as the primary entry point. Based on the historical data and forecast, STRK shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the midpoint, indicating neither strong bullish nor bearish momentum. However, the price has been bouncing around the support price of $0.63, and the Bollinger Bands show that the price is currently near the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a long position with an entry price of $0.651. A stop loss should be set just below the support level at $0.62 to protect against a potential breakdown. The initial target price will be $0.672, aligning with the forecast for April 4, 2025. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI falls below 30, indicating an oversold condition, we will consider entering a long position. Conversely, if the price touches the lower Bollinger Band, it also suggests a potential buying opportunity. If the RSI rises above 70, signaling an overbought condition, we will consider taking profits or tightening the stop loss. If the price reaches the upper Bollinger Band, it suggests a potential reversal point. The final portfolio will be a combination of these three strategies, prioritizing the long position with an entry price of $0.651, a stop loss at $0.62, and a target price of $0.672. Based on the historical data and forecast, Ethereum shows a downtrend, particularly evident in the recent forecast prices. The RSI consistently remains below 50, indicating a prevailing bearish sentiment, with values fluctuating between 34.0 and 47.4. The Bollinger Bands also suggest a contraction, with the bottom band nearing the current price, indicating potential for a downward move. Therefore, I recommend a short position strategy. The entry price should be $1,830, coinciding with the forecast price on April 2, 2025. A stop loss should be placed at $1,860, just above the support level, to mitigate potential losses if the price rebounds. The target price is set at $1,740, aligning with the forecast price on April 4, 2025. To refine this strategy, we can incorporate the RSI and Bollinger Bands. When the RSI falls below 30, it signals an oversold condition, which may present a buying opportunity. However, given the overall downtrend, I prioritize the short strategy. The Bollinger Bands indicate that the price is approaching the lower band, which could signal a potential short-term dip before a further decline. Combining these indicators, I maintain the short position with the entry price of $1,830, a stop loss of $1,860, and a target price of $1,740. This strategy aims to capitalize on the predicted downtrend while incorporating risk management measures. Based on the historical data and forecast, XRP shows a downtrend with decreasing prices in the forecast period. The RSI consistently fluctuates around 50, indicating neither overbought nor oversold conditions. However, the Bollinger Bands suggest potential volatility. The price is currently near the center of the bands, and the forecast indicates a further decline. Given the downtrend and the forecast, a short position strategy is recommended. We will enter a short position at $2.3, placing a stop-loss order at $2.57 to limit potential losses if the price unexpectedly rises. The initial target price will be $2.11, aiming to capitalize on the predicted downward movement. To refine the strategy, we will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, we will consider covering the short position or reducing the position size. Conversely, if the RSI rises above 80, suggesting an overbought condition, we will consider exiting the short position. The portfolio will prioritize the short position with an entry price of $2.3, a stop loss at $2.57, and a target price of $2.11. This approach balances the predicted downtrend with RSI-based adjustments to manage risk and optimize returns. Based on the historical data and forecast, Binance Coin shows a sideways trend with support at $618 and resistance at $637. The RSI fluctuates between 50 and 57, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the middle band, suggesting a period of consolidation. Considering the forecast for the next week, the price is expected to hover around $625 to $633. Therefore, I propose a range-bound trading strategy. We will implement a strategy combining RSI and Bollinger Bands. When the RSI falls below 50 and the price touches the lower Bollinger Band, we will enter a long position at $619 with a stop loss at $618. The initial target price will be $626, aiming for a quick profit. If the price continues to rise and touches the upper Bollinger Band, we will move the stop loss to the center of the Bollinger Band, around $627, and adjust the target price to $631. If the RSI reaches 80 and the price touches the upper Bollinger Band, we will close the position and take profit at $631. This strategy aims to capitalize on short-term price fluctuations within the established range. Based on the historical data and forecast, Stellar shows a slight upward trend with periods of consolidation. The RSI consistently remains within the 39.8 to 52.2 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a potential breakout. The forecast prices for the next week are generally declining, which is a bearish signal. Considering these factors, I recommend a cautious strategy focusing on potential short-term gains. My proposed strategy is to initiate a long position at $0.278, coinciding with the start of the forecast period. Given the recent price action and the forecast slight downward trend, I will place a stop-loss order at $0.256, just below the established support level, to limit potential losses. I will set a target price at $0.294, which is near the recent resistance level. This strategy combines the RSI readings, Bollinger Bands, and support/resistance levels to maximize potential returns while minimizing risk. The RSI is not in the oversold range, so it's not a good entry point for a long position. The Bollinger Bands are narrowing, which indicates a potential breakout. The forecast price is slightly decreasing, which indicates a bearish signal. Therefore, a long position at $0.278 with a stop loss at $0.256 and a target price at $0.294 is a reasonable approach. Based on the historical data and forecast, Toncoin exhibits an overall upward trend, consistently testing the resistance level of $4.04. The RSI values have been fluctuating, but recently crossed 60, indicating a potential overbought condition. The Bollinger Bands have been expanding, suggesting increased volatility and a potential breakout. Considering these factors, I propose a long position strategy with an entry price of $3.98. A stop-loss order will be placed at $3.71, just below the support level, to mitigate potential losses. The initial target price will be $4.15, aligning with the forecast price and the upper Bollinger Band. To optimize returns, I will implement a dynamic target price strategy. If the price reaches $4.15, I will move the stop-loss to the entry price of $3.98, securing profits while allowing for further upside potential. If the price continues to rise, I will adjust the target price to $4.3, based on the upper Bollinger Band. This combined strategy leverages both RSI and Bollinger Bands to maximize profit potential while managing risk effectively. The portfolio will be 60% long position and 40% in cash. Based on the historical data and forecast, Cardano shows a slight downward trend with fluctuating volatility. The RSI consistently remains between 45 and 50, indicating neither overbought nor oversold conditions. Considering the Bollinger Bands, the price has been oscillating within the bands, suggesting sideways movement. The support price is consistently at $0.647, while the resistance is at $0.743. The forecast data predicts a further decline, potentially reaching $0.681. Therefore, I recommend a cautious strategy focusing on short-term opportunities. I propose a strategy combining RSI and Bollinger Bands. We will initiate a long position when the price touches the lower Bollinger Band and the RSI dips below 40. Specifically, enter a long position at $0.681. Set a stop-loss order at $0.647, just below the support level. The initial target price will be $0.71, aligning with the resistance level. If the price reaches $0.71, we will move the stop-loss to the entry price of $0.681 to secure profits. If the price continues to rise, the second target price will be $0.731. This strategy aims to capitalize on short-term bounces while mitigating risk with strategic stop-loss placements. Based on the historical data and forecast, Litecoin shows a downtrend, particularly evident in the recent forecast prices declining from 88.5 to 82.8. The RSI consistently below 50, with values fluctuating between 35.8 and 44.0, indicates a generally weak momentum. The Bollinger Bands show that the price is nearing the lower band, suggesting potential for further downside movement. Therefore, I recommend a short position strategy. We will enter a short position at 88.5 plus $0, capitalizing on the predicted downward trend. To mitigate risk, we will set a stop-loss at 87.3 plus $0, just above the lower Bollinger Band. The initial target price will be 85.4 plus $0, aligning with the forecast price. To enhance returns, we will implement a dynamic target strategy. If the price reaches 85.4 plus $0, we will move the stop-loss to the entry price of 88.5 plus $0, securing profits while allowing for potential further downside. If the price continues to fall, we will adjust the target price to 82.8 plus $0, based on the lowest forecast price. This strategy combines the predicted downtrend, RSI readings, and Bollinger Band analysis to maximize potential returns while managing risk effectively. Based on the historical data and forecast, Doge-Coin shows an overall upward trend, consistently bouncing off the support price of $2.29. The RSI indicates that the asset is currently within a neutral range, fluctuating between 40 and 60. The Bollinger Bands show that the price has been trending towards the upper band, suggesting bullish momentum. Considering these factors, I recommend a long position strategy with an entry price of $2.47. To manage risk, set a stop loss at $2.39, just above the recent support level. For the target price, aiming for $2.63 aligns with the forecast and the upper Bollinger Band, offering a potential profit of $16. To refine the strategy, I will incorporate an RSI-based filter. If the RSI falls below 30, indicating an oversold condition, consider entering a long position at $2.49 with a stop loss at $2.42 and a target price of $2.62. Conversely, if the RSI exceeds 70, suggesting an overbought condition, avoid entering a position. This layered approach combines trend analysis, technical indicators, and risk management to maximize potential returns while minimizing losses. The portfolio will prioritize the long position with an entry price of $2.47, stop loss of $2.39 and target price of $2.63 as the primary strategy. Based on the historical data and forecast, Aptos demonstrates a generally upward trend, though with notable volatility. The support price consistently remains around $5.15, while the resistance fluctuates, peaking at $6.03. The RSI values hover between 40.0 and 56.3, indicating periods of both oversold and overbought conditions. The Bollinger Bands show periods of contraction and expansion, suggesting varying degrees of market volatility. Given this, I propose a combined strategy incorporating RSI, Bollinger Bands, and support/resistance levels. First, we will implement a strategy based on the RSI. When the RSI drops below 20, indicating an oversold condition, we will enter a long position at $5.15, placing a stop loss at $4.95 and setting a target profit at $6.03. Second, we will utilize the Bollinger Bands to predict price movements. If the price touches the bottom of the Bollinger Bands, we will enter a long position at $5.55, with a stop loss at $5.35 and a target at $6.03. Finally, we will incorporate the support and resistance levels. If the price approaches the support level of $5.15, we will enter a long position at $5.15, with a stop loss at $4.95 and a target at $5.95. This combined approach aims to maximize potential returns while mitigating risk by leveraging multiple technical indicators and price levels. Based on the historical data and forecast, SE demonstrates a fluctuating trend with a recent downward pressure. The RSI consistently remains below 80, indicating the asset is not significantly overbought. However, it dips below 40 on multiple occasions, signaling potential oversold conditions. The Bollinger Bands show that the price has been oscillating within the bands, with a recent tendency to approach the lower band. Considering the forecast for the next week predicts a continued decline towards $0.19, I recommend a contrarian strategy focusing on short-term bounces. My strategy involves identifying moments when the RSI dips below 38, suggesting an oversold condition, and the price touches the lower Bollinger Band. For example, on March 28, 2025, the RSI was 40.5 and the price was $0.192. I would enter a long position at $0.192, setting a stop loss at $0.18 to limit potential losses. The target price would be $0.208, near the recent resistance level and the center of the Bollinger Bands. This strategy aims to capitalize on short-term price rebounds while mitigating risk with a conservative stop loss. This approach should generate high returns in the short term. Based on the historical data and forecast, Ethereum Classic is currently in a downtrend, with the forecast indicating a further decline to $16.2. The RSI consistently remains below 80, suggesting the asset is not overbought, but the recent values are approaching the oversold level of 20. The Bollinger Bands show that the price is approaching the lower band, indicating a potential for a short-term bounce. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. We will initiate a long position at $17.3, placing a stop-loss order at $16.7 to limit potential losses. The target price will be set at $18.3, aiming to capitalize on a potential bounce from the lower Bollinger Band and a rebound in the downtrend. To refine this strategy, we'll incorporate RSI signals. If the RSI falls below 20, consider a long position at $16.8, with a stop-loss at $16.2 and a target price of $17.8. Conversely, if the price breaks below the lower Bollinger Band and the RSI confirms an oversold condition, we can execute a short position at $16.7, setting a stop-loss at $17.1 and a target price of $16.2. This combined approach, utilizing both Bollinger Bands and RSI, should provide a more efficient portfolio, balancing risk and reward in the current market conditions. Based on the historical data and forecast, Polygon has been fluctuating within a defined range, with a support level consistently around $0.206 and a resistance around $0.22. The RSI indicates that the asset is currently in an oversold territory, hovering around 39.6 on March 28, 2025. The Bollinger Bands are narrowing, suggesting decreasing volatility, and the forecast price for the next week shows a slight downward trend, initially at $0.216, then decreasing to $0.208. Considering these factors, I recommend a long position with an entry price of $0.211 on March 29, 2025. The stop-loss should be set just below the support level at $0.204 to mitigate potential losses, and the target price should be set at the resistance level of $0.22, aiming for a $0.009 profit. To refine this strategy, we can incorporate the Bollinger Bands. When the price touches the lower band, it signals a potential oversold condition, confirming our RSI analysis. If the price remains below the lower band, it might indicate a further decline, and we could adjust the stop-loss accordingly. Conversely, if the price breaks above the upper band, it would signal a potential breakout, prompting us to revise the target price upwards. This combined approach leverages both RSI and Bollinger Bands to create a more robust and adaptive investment strategy. Therefore, a portfolio with this combined strategy should achieve high returns. Based on the historical data and forecast, AEVO shows a declining trend. The RSI values fluctuate between 38.1 and 49.5, indicating periods of both oversold and overbought conditions. However, the recent downward pressure on the forecast price suggests a potential continuation of the downtrend. The Bollinger Bands show that the price is approaching the lower band, which could indicate an oversold condition. Considering these factors, I recommend a short position strategy with a focus on capitalizing on the predicted downward movement. The entry price for this short position should be $0.119, coinciding with the forecast price on March 30, 2025. To manage risk effectively, set a stop-loss price at $0.127, just above the recent high of $0.126 on March 21, 2025. This will protect against unexpected upward movements. The target price for this short position should be $0.109, aligning with the forecast price on April 4, 2025. This target allows for a substantial profit while acknowledging the potential for price fluctuations. This strategy combines technical indicators and forecast data to maximize potential returns while minimizing risk. The RSI, Bollinger Bands, and forecast price all point to a favorable shorting opportunity. Based on the historical data and forecast, optimism shows a mixed trend with periods of both upward and downward movement. The support price consistently remains at $0.766, while the resistance fluctuates around $0.896. The RSI values are generally within the neutral range, oscillating between 38.3 and 47.0, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands indicate periods of volatility, with the price occasionally touching the upper or lower bands. Considering the forecast for the next week, which predicts a downward trend with prices ranging from $0.85 to $0.798, I recommend a short position strategy. Specifically, I suggest entering a short position at $0.85. The stop loss should be set at $0.876, just above the upper Bollinger Band and slightly above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price is $0.81, aligning with the lower Bollinger Band and providing a reasonable profit margin. If the price reaches $0.81, we can reevaluate the situation. If the downward trend continues, we can adjust the target price to $0.798 based on the forecast. This strategy combines technical indicators and price action to maximize potential returns while managing risk effectively. Based on the historical data and forecast, STRK exhibits a downtrend. The price has been consistently declining from $0.187 to a forecasted $0.15. The RSI consistently remains below 80, indicating no overbought conditions. However, it frequently dips below 40, suggesting oversold conditions. Considering the forecast and the recent downtrend, a contrarian strategy focusing on short-term bounces after oversold conditions may be effective. Therefore, I recommend a strategy where we wait for the RSI to reach below 35, then enter a long position at $0.156. Place a stop-loss order at $0.152 to limit potential losses if the downtrend continues. Set a target price at $0.162 to capture a short-term profit from a potential bounce. Furthermore, we can leverage the Bollinger Bands to refine this strategy. When the price touches the lower band and the RSI is below 35, it indicates a potential oversold condition and a possible bounce. We should enter a long position at $0.15 when the price touches the lower Bollinger Band and the RSI is below 35. Place a stop-loss order at $0.148, slightly below the lower band, to protect against further downside. A target price of $0.168, aligning with a potential return to the middle Bollinger Band, is set to maximize short-term gains. This combined RSI and Bollinger Bands approach aims to capitalize on short-term reversals within the prevailing downtrend, offering a balance between risk and reward. Based on the historical data and forecast, Solana shows a mixed trend with periods of consolidation and slight upward movement. The RSI fluctuates around the mid-range, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a potential downward trend in the coming week, with prices ranging from $131 to $124. Considering the support price of $125 and the Bollinger Bands, I recommend a cautious approach. We will implement a strategy based on the RSI, targeting potential oversold opportunities. The entry price will be $124, with a stop-loss at $123 to limit potential losses. The target price will be $130, aiming to capitalize on a potential rebound. To enhance the strategy, we will incorporate Bollinger Bands analysis. If the price touches the lower band of $124, it signals a potential oversold condition, confirming our RSI entry. The stop-loss remains at $123, and the target price is set at $130. This combined RSI and Bollinger Band strategy offers a balanced approach, leveraging both momentum and volatility indicators. This portfolio will provide a high-return investment. Based on the historical data and forecast, Jupiter shows a decreasing trend. The RSI values fluctuate between 33.1 and 46.7, indicating periods of oversold and overbought conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. The forecast for the next week predicts a continuous decline, with prices falling from 0.508 to 0.458. Considering these factors, I recommend a short selling strategy. We will enter a short position at $0.508, placing a stop-loss order at $0.569, just above the upper Bollinger Band to avoid false signals. The initial target price will be $0.477, aligning with the lower Bollinger Band and the forecast price. To optimize returns, we will employ a dynamic trailing stop-loss strategy. If the price rises to $0.545, we will adjust the stop-loss to $0.538. If the price continues to rise to $0.567, we will adjust the stop-loss to $0.569. If the price reaches $0.477, we will take partial profits and move the stop loss to the entry price of $0.508 to protect profits and allow for potential further gains. This combined approach leverages the RSI and Bollinger Bands to identify optimal entry and exit points, while the trailing stop loss helps to maximize profits in a declining market. Based on the historical data and forecast, Render shows a generally upward trend, supported by the recent price action and the forecast for the next week. The RSI values fluctuate between 40 and 60, indicating neither extreme overbought nor oversold conditions, suggesting a stable momentum. The Bollinger Bands have been widening recently, indicating increased volatility and potential for price movement. Considering these factors, I propose a long position strategy focusing on capitalizing on the upward momentum. My strategy involves entering a long position at $3.7, coinciding with the start of the forecast period. Given the support level at $2.97, I will set a stop loss at $2.97 to limit potential losses. The resistance level at $4.04 provides a reasonable target price, but I will adjust this to $3.82 based on the forecast for the week. This strategy combines technical indicators and price action to maximize potential returns while managing risk. This is a high-return strategy with a moderate risk level. Based on the historical data and forecast, Solana name service shows a declining trend. The RSI consistently fluctuates around the 40 level, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a continued downward trajectory, with prices potentially reaching as low as $0.089. Considering this, I propose a short position strategy. We will enter a short position at $0.116. The stop loss will be set at $0.122 to protect against unexpected upward movements. The initial target price will be $0.105, aligning with the forecast. To refine the strategy, we'll incorporate the Bollinger Bands. The price has been approaching the lower band recently, suggesting potential for a bounce. Therefore, if the price retraces to $0.105, we will move the stop loss to the middle of the Bollinger Bands, around $0.111. If the price continues to fall below $0.105, we will adjust the target price to $0.0979. This dynamic adjustment of stop loss and target prices will allow us to maximize profits while minimizing risks in this declining market. Based on the historical data and forecast, Doge-Coin shows a slight upward trend, but it's currently near the support level of $0.178. The RSI indicates that the asset is approaching oversold territory, with values fluctuating around 38 to 52. The Bollinger Bands suggest increased volatility, with the price occasionally touching the lower band. Considering these factors, I recommend a long position with an entry price of $0.177. The stop loss should be placed just below the support level at $0.176 to mitigate potential losses if the price breaks down. A conservative target price would be $0.182, aligning with the upper Bollinger Band and a reasonable profit margin. To refine this strategy, we'll incorporate RSI and Bollinger Band signals. If the RSI dips below 20, indicating a strong oversold condition, it's a buy signal with an entry price of $0.177. The stop loss remains at $0.176. Conversely, if the RSI reaches 80 or above, it suggests an overbought condition, and we'd consider exiting the position. The target price for this strategy is $0.182. This combined approach leverages both momentum and volatility indicators for a more informed investment decision. Based on the historical data and forecast, PEPE shows a slightly upward trend with periods of consolidation. The RSI fluctuates between 39.8 and 57.7, indicating both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of low volatility followed by a potential breakout. The support price consistently remains at $0.0000710, while the resistance is at $0.0000930. Considering these factors, I recommend a long position strategy focusing on the anticipated upward momentum. The entry price should be set at $0.0000780, coinciding with the beginning of the forecast period and a relatively low RSI value. A stop-loss order should be placed at $0.0000710, just below the established support level, to limit potential losses. The initial target price is $0.0000850, aligning with the upper Bollinger Band and a reasonable profit margin. If the price reaches this target, consider moving the stop-loss to break even to protect profits. A secondary target price can be set at $0.0000930, the resistance level, to capture further gains if the upward trend continues. This strategy combines RSI, Bollinger Bands, and support/resistance levels to maximize potential returns while managing risk effectively. Based on the historical data and forecast, SHIB shows a slightly upward trend with price fluctuations within a defined range. The support price consistently remains at $0.0000130, while the resistance fluctuates around $0.0000152. The RSI indicator has been oscillating between 41.6 and 57.1, indicating periods of both oversold and overbought conditions. The Bollinger Bands have been narrowing recently, suggesting a period of consolidation before a potential breakout. Considering these factors, I propose a long position strategy with a focus on capitalizing on potential upward movements while mitigating risk. My strategy involves entering a long position at $0.0000132 when the RSI dips below 40, indicating an oversold condition. The stop-loss will be set at $0.0000128, just below the recent support level and the lower Bollinger Band, to protect against unexpected downside moves. The initial target price will be $0.0000137, aligning with the upper Bollinger Band and a reasonable profit margin. If the price reaches this target, we will reevaluate the situation and consider moving the stop-loss to break even or setting a new target closer to the resistance level of $0.0000152. This approach combines RSI-based entry signals with Bollinger Band-defined stop-loss and target levels, aiming for high returns while managing risk effectively. Based on the historical data and forecast, DOG-COIN exhibits a generally sideways trend with recent volatility. The RSI fluctuates around the 40 to 50 range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show a contraction recently, suggesting a potential for a breakout. The forecast for the next week indicates a downward trend, with prices potentially dropping to $0.438. Considering these factors, I recommend a short-term contrarian strategy focusing on capitalizing on potential bounce-backs from the lower Bollinger Band. Specifically, I propose entering a long position at $0.456 on April 4, 2025, when the forecast price hits the lower Bollinger Band. Set a stop-loss at $0.438 to limit potential losses if the downward trend persists. Aim for a target price of $0.508, aligning with the recent resistance level and the center of the Bollinger Bands. This strategy attempts to profit from a short-term rebound while managing risk with a defined stop-loss. This is a high-risk, high-reward strategy suitable for experienced traders. Based on the historical data and forecast, Doge-Coin shows a slight upward trend. The price has been fluctuating within a defined range, with support around $0.0024 and resistance around $0.00317. The RSI has been oscillating around the 50 mark, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show a narrowing trend recently, suggesting a potential breakout. Considering this, I recommend a long position strategy. We will enter a long position at $0.00249. The stop-loss will be placed just below the support level at $0.00239 to limit potential losses. The initial target price will be set at the resistance level of $0.00317. To refine this strategy, we will incorporate RSI and Bollinger Band signals. If the price touches the bottom of the Bollinger Bands, which is around $0.0019, it suggests a potential buying opportunity. If the RSI dips below 20, indicating an oversold condition, we will also consider entering a long position at $0.00249. In this scenario, the stop loss will be set at $0.00239, and the target price will be adjusted to $0.00285. This combined strategy aims to maximize potential returns while mitigating risks by leveraging multiple technical indicators and price action analysis. Based on the historical data and forecast, Near Protocol shows a mixed trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 to 55 range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands suggest potential volatility. The price is currently near the upper Bollinger Band, hinting at a possible pullback. Considering these factors, I propose a strategy combining RSI and Bollinger Band signals. I recommend a long position entry at $2.75. Place a stop-loss order at $2.45, just below the support level, to mitigate potential losses. Set a target price at $3.14, near the resistance level, for a potential profit of 39 cents. To refine the strategy, I will incorporate RSI signals. If the RSI drops below 20, indicating an oversold condition, I would consider entering a long position at $2.31. The stop loss would be set at $2.19, below the lower Bollinger Band, and the target price at $2.82. Conversely, if the RSI exceeds 80, suggesting an overbought condition, a short position could be considered. However, given the current upward momentum, I prioritize a long position. The combined strategy, prioritizing long positions with RSI and Bollinger Band confirmations, offers a balanced approach to capitalize on Near Protocol's potential while managing risk. Based on the historical data and forecast, Internet Computer shows a slightly upward trend, but with considerable volatility. The RSI consistently fluctuates, indicating indecision in the market. The Bollinger Bands show periods of contraction and expansion, suggesting potential breakout opportunities. Considering the support at $5.43 and resistance at $5.83, the market is trading within a defined range. My strategy will focus on capitalizing on short-term volatility within this range, combined with RSI and Bollinger Band signals. I recommend a combined strategy that incorporates all three indicators for optimal results. First, I suggest a long position when the RSI falls below 40 and the price touches the bottom of the Bollinger Bands. For example, on April 4, 2025, when the forecast price is $5.57, the RSI is expected to be around 42. This aligns with both oversold conditions and Bollinger Band's proximity. The entry price will be $5.57, with a stop-loss placed just below the support level at $5.43, setting it at $5.38. The initial target price will be the resistance level at $5.83. If the price reaches $5.83, we will move the stop-loss to the entry price of $5.57 to secure profits. If the price continues to rise, the second target price will be $6. This combined strategy leverages both RSI and Bollinger Bands for higher probability trades within the established support and resistance range. Based on the historical data and forecast, Injective exhibits a declining trend. The forecast for the next week indicates a continued downward trajectory, with prices ranging from $9.63 to $8.67. The RSI consistently remains below 50, with recent values fluctuating between 37.6 and 46.9, suggesting neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is approaching the lower band, indicating potential for further decline. Considering these factors, I recommend a short position strategy. Enter a short position at $9.63, placing a stop-loss at $9.44 to limit potential losses. Set a target price of $9.2, aiming for a profit of approximately $0.43 per injective. To refine this strategy, we will incorporate RSI and Bollinger Bands. When the RSI dips below 30, it signals an oversold condition, providing an opportunity to enter a long position. Conversely, when the RSI exceeds 70, it suggests an overbought condition, prompting a short position. The Bollinger Bands can be used to confirm these signals. If the price touches the lower band, it supports a long position, while touching the upper band reinforces a short position. Combining these indicators, I suggest a hybrid strategy. Initially, maintain the short position at $9.63 with a stop loss at $9.44. If the price rebounds and the RSI reaches 60, consider covering the short position and initiating a long position at $9.2 with a target price of $9.44. This dynamic approach allows for capitalizing on both downward and upward price movements. Based on the historical data and forecast, BTC exhibits a downtrend with increasing selling pressure. The RSI consistently stays below 50, indicating a prevailing bearish sentiment, with values often dipping into oversold territory below 40. The Bollinger Bands are narrowing, suggesting decreasing volatility, but the forecast prices consistently predict a decline, reaching as low as $223. Considering these factors, I recommend a short selling strategy. Entry price will be $244, with a stop loss set at $255 to protect against potential upward fluctuations. The initial target price is $233, aligning with the forecast for April 3, 2025. To refine this strategy, we'll incorporate a dynamic adjustment based on the RSI and Bollinger Bands. If the price approaches the lower Bollinger Band and the RSI remains below 30, consider adding to the short position at $239. A tighter stop loss of $244 should be used for this added position. The final target price for the entire position will be $223, capitalizing on the predicted downward trend. This layered approach allows for maximizing potential gains while mitigating risk through strategically placed stop-loss orders. Based on the historical data and forecast, THETA network shows a recent downtrend, especially in the last week, with a forecast indicating continued downward pressure. The RSI consistently hovers below 50, with readings dipping into oversold territory, suggesting potential for a short-term bounce. However, the forecast indicates a further decline, and the Bollinger Bands show that the price is nearing the lower band, reinforcing a bearish outlook. Therefore, I recommend a short position with an entry price of $0.894. The stop loss should be set slightly above the recent high at $0.92 to avoid being triggered by a potential short-term rebound. The target price for this trade is $0.86, aligning with the established support level. To refine this strategy, I'll incorporate the RSI and Bollinger Bands. When the RSI falls below 30, it signals an oversold condition, and the price is near the lower Bollinger Band, it strengthens the short signal. I'll initiate a short position at $0.894, placing a stop loss at $0.92 and setting a target price of $0.86. This strategy combines technical indicators with price action and support levels to maximize potential returns while managing risk. This portfolio is the most efficient because it combines all three strategies. Based on the historical data and forecast, WorldCoin shows a volatile trend with periods of consolidation and upward movement. The RSI consistently fluctuates around the 40 level, indicating neither strong bullish nor bearish momentum. However, the price recently touched the resistance level of $0.898 and is now approaching the forecast period. Considering the Bollinger Bands, the price is currently near the lower band, suggesting a potential bounce. Therefore, I recommend a moderately bullish strategy. We will enter a long position at $0.842. Given the support level at $0.825, we will set a stop loss at $0.825 to limit potential losses. The initial target price will be $0.898, the recent resistance level. To refine this strategy, we will incorporate the RSI. If the RSI rises above 50 during the forecast period, indicating strengthening bullish momentum, we will adjust the target price to $0.934. Conversely, if the RSI dips below 30, suggesting a weakening trend, we will exit the position and reevaluate. This dynamic approach allows us to adapt to changing market conditions and maximize potential returns while minimizing risk. The portfolio will prioritize this moderately bullish strategy due to its balance between potential gains and risk mitigation. Based on the historical data and forecast, Hooked Protocol shows a fluctuating trend with support at 0.132 and resistance at 0.156. The RSI fluctuates between 35.2 and 48.6, indicating periods of oversold and overbought conditions. The Bollinger Bands show volatility, with the price frequently touching the upper and lower bands. Considering the recent RSI values nearing 50 and the forecast predicting a decline, I propose a short-term contrarian strategy. I recommend entering a long position at $0.139, coinciding with the forecast low on March 30, 2025. The stop loss should be set at $0.137, just below the forecast low and near the support level, to limit potential losses. The target price is $0.156, aligning with the resistance level. To enhance this strategy, I will incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, indicating an overbought condition, I will exit the position. Conversely, if the price touches the lower Bollinger Band, indicating an oversold condition, I will consider adding to the position. This combined strategy, with an entry at $0.139, a stop loss at $0.137, and a target price of $0.156, aims to capitalize on short-term price fluctuations while managing risk effectively. The RSI and Bollinger Bands will serve as dynamic indicators to adjust the position based on changing market conditions. Based on the historical data and forecast, Artificial Superintelligence Alliance shows a mixed trend with recent volatility. The RSI fluctuates around 40, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a downward trend with prices falling below $0.50, approaching the support level of $0.482. Considering the RSI and Bollinger Bands, I propose a strategy that combines a cautious short position with a tight stop loss. The entry price for a short position will be $0.515. The stop loss will be set at $0.562, just above the recent resistance level, to limit potential losses if the price unexpectedly reverses. The initial target price will be $0.482, the support level, aiming for a quick profit. To refine the strategy, I'll incorporate the Bollinger Bands. If the price breaks below the lower band, which is currently around $0.469, it strengthens the downward trend, and I will adjust the target price to $0.45. Conversely, if the price touches the upper band, which is around $0.57, it signals a potential reversal, and I will close the short position and consider a long position. This dynamic approach, combining RSI signals, support and resistance levels, and Bollinger Bands, will help maximize returns while managing risk effectively. Based on the historical data and forecast, Polkadot shows a slight upward trend, though it has experienced volatility. The RSI fluctuates around the mid-range, indicating neither strong overbought nor oversold conditions. The Bollinger Bands have been widening recently, suggesting increased market volatility. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position when the price touches the lower Bollinger Band, aiming to capitalize on potential rebounds. Specifically, on April 4, 2025 Friday, the forecast price is $4.35. The lower Bollinger Band is $3.84, so we will enter the market at $3.84. Set a stop-loss order at $3.75 to limit potential losses. Our target price will be $4.65, anticipating a rise towards the upper Bollinger Band. To refine the strategy, we'll incorporate RSI signals. If the RSI falls below 20, indicating an oversold condition, we'll enter a long position at $3.97, the support price. The stop loss will be set at $3.7, and the target price will be $4.7. Conversely, if the RSI exceeds 80, suggesting an overbought condition, we will avoid entering the market. Combining these approaches, the most efficient portfolio involves entering long positions when the price touches the lower Bollinger Band or the RSI indicates an oversold condition, with appropriate stop loss and target prices to manage risk and maximize potential returns. The final strategy is to enter the market at $3.84, set a stop loss order at $3.75, and target $4.65. Based on the historical data and forecast, Filecoin shows a slight downtrend, particularly evident in the recent forecast prices. The RSI consistently fluctuates around the mid-range, indicating neither strong overbought nor oversold conditions. However, the Bollinger Bands are narrowing, suggesting a period of consolidation. Given the forecast's downward trajectory and the support price of $2.74, I recommend a short position. Enter a short position at $2.95, setting a stop loss at $3.2, just above the upper Bollinger Band. The initial target price should be $2.85, aligning with the forecast price and a reasonable profit margin. To refine this strategy, we'll incorporate a secondary target based on the support level. If the price reaches $2.85, we'll move the stop loss to break even at $2.95. If the price continues to fall, a final target price of $2.76 can be set, coinciding with the forecast low. This tiered approach allows for profit-taking while mitigating risk. The overall strategy combines technical indicators and forecast data to capitalize on the anticipated downward movement of Filecoin, ensuring a robust and adaptable investment approach. Based on the historical data and forecast, Conflux shows a slight downtrend in the forecast period, with prices declining from 0.0885 to 0.0824. The RSI values are fluctuating between 37.1 and 50.0, indicating neither strong overbought nor oversold conditions. The Bollinger Bands show that the price is currently near the lower band, suggesting a potential for a slight bounce. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position at $0.0846 with a stop loss at $0.0824, just below the forecast low. The target price will be set at $0.0925, near the recent resistance level. This strategy aims to capitalize on a potential short-term bounce while limiting risk with a well-defined stop loss. To enhance the efficiency of the portfolio, I suggest combining the RSI and Bollinger Band strategies. The RSI strategy will be the primary driver, triggering the entry and exit points based on the 20 and 80 levels. The Bollinger Band strategy will act as a secondary confirmation. If the price approaches the lower Bollinger Band while the RSI is below 30, it strengthens the buy signal. Conversely, if the price nears the upper Bollinger Band and the RSI exceeds 70, it reinforces the sell signal. This combined approach leverages the strengths of both indicators, improving the overall accuracy and profitability of the investment. Based on the historical data and forecast, Ethereum name service shows a declining trend with decreasing forecast prices. The RSI indicates that the asset is currently in the oversold territory, fluctuating between 32.3 and 44.0, which suggests a potential for a bounce. The Bollinger Bands are narrowing, indicating decreasing volatility, and the forecast price is below the center of the Bollinger Bands, reinforcing the downward trend. Considering these factors, I recommend a contrarian strategy aiming to capitalize on a potential short-term bounce while managing downside risk. My proposed strategy is to enter a long position at $15.3+. The stop loss should be set at $15.8+ to protect against further downside if the downtrend persists. The initial target price is $16.7+, aligning with the recent support level and a potential RSI-driven bounce. If the price reaches $16.7+, consider moving the stop loss to break even to protect profits and potentially ride further upward momentum if the trend reverses. This strategy balances the potential for a short-term gain with a clearly defined risk management plan, given the overall bearish outlook. Based on the historical data and forecast, Avalanche shows a generally upward trend with periods of consolidation. The RSI consistently fluctuates, indicating a mixed sentiment. The Bollinger Bands have widened recently, suggesting increased volatility and potential for price swings. Considering the support at $17.5 and resistance at $23.5, a strategic approach is warranted. I recommend a portfolio combining RSI, Bollinger Bands, and trend analysis. First, we'll implement a long position when the RSI dips below 30, targeting an entry price of $20.3. The stop loss will be set at $19.5, just below the lower Bollinger Band to mitigate risk. The initial target price is $23.5, the resistance level. If the price reaches $23.5, we'll move the stop loss to the entry price of $20.3 to secure profits and potentially extend the target to $24.5, the upper Bollinger Band. If the RSI rises above 70, we'll consider exiting the position or tightening the stop loss to protect gains. This blended strategy leverages multiple indicators for a robust and adaptive approach to maximize returns while managing risk. Based on the historical data and forecast, Doge-Coin shows a slightly downward trend, with the forecast prices consistently below the recent closing prices. The RSI values fluctuate between 39.9 and 48.9, indicating periods of both oversold and overbought conditions. The Bollinger Bands show that the price has been oscillating within a defined range, with recent prices nearing the lower band. Considering these factors, I recommend a cautious trading strategy focused on short-term opportunities. My strategy involves a combination of RSI and Bollinger Band signals. I will initiate a long position at $0.0243+ when the RSI falls below 40, indicating an oversold condition. The stop loss will be set at $0.0235+, just below the support price of $0.0233+, to limit potential losses. The target price will be $0.0263+, aiming to capture a rebound towards the middle of the Bollinger Bands. This strategy prioritizes risk management with a tight stop loss and aims for a modest profit in a potentially declining market. If the price breaks through the support level of $0.0233+, I will immediately close the position to prevent further losses. This approach balances potential gains with the need to protect capital in a volatile market. Based on the historical data and forecast, PENDLE shows a generally upward trend, with price fluctuations within the support and resistance levels of $2.67 and $2.82. The RSI consistently stays above 30, indicating a bullish momentum. The Bollinger Bands have been widening, suggesting increased volatility, and the price is currently near the upper band, hinting at a potential pullback. Considering these factors, I propose a strategy focusing on short-term gains with a moderate risk tolerance. My recommended strategy is to enter a long position at $2.73, coinciding with the forecast price and the upper Bollinger Band touch. Set a stop loss at $2.67, just below the established support level, to limit potential losses. Aim for a target price of $2.85, slightly below the recent resistance level. This strategy combines the RSI's bullish signal, the Bollinger Band's indication of potential pullback, and the support and resistance levels to maximize potential returns while managing risk effectively. The expected profit is $0.12. Based on the historical data and forecast, the sandbox has shown a mixed trend with periods of consolidation and slight upward movement. The RSI consistently fluctuates around the 40 to 50 range, indicating neither strong bullish nor bearish momentum. The Bollinger Bands have been narrowing recently, suggesting a potential breakout. Given the current RSI around 41.4 and the forecast predicting prices around 0.28 to 0.29, I recommend a cautious long position. We will enter a long position at $0.288, placing a stop loss at the support level of $0.272 to limit potential losses. The initial target price will be $0.299, aligning with the recent resistance level and a potential profit of $0.011. To refine this strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band of $0.314, we will adjust the target price to $0.291, aiming for a more substantial gain. Conversely, if the price falls below the lower Bollinger Band of $0.259, we will exit the position immediately to prevent further losses. This dynamic approach, combining RSI and Bollinger Bands, allows for adaptability to changing market conditions and maximizes potential returns while minimizing risk. The portfolio will be 60% based on RSI and 40% based on Bollinger Bands. Based on the historical data and forecast, Decentraland exhibits a slightly downward trend with fluctuating volatility. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the forecast suggests a continued decline, potentially testing the support level of $0.248. Considering these factors, I propose a cautious short-term strategy focusing on potential bounces near the support level. I would initiate a long position at $0.257, placing a stop-loss order at $0.265 to limit potential losses if the price continues to decline. The initial target price would be $0.279, aiming to capitalize on minor upward corrections. To refine this strategy, I'll incorporate the Bollinger Bands and RSI. When the price approaches the lower Bollinger Band, around $0.255, and the RSI dips below 30, indicating an oversold condition, I would enter a long position. The stop loss would be set at $0.248, just below the support level. The target price would be $0.279, aligning with the recent resistance. This combined strategy leverages both volatility indicators to identify high-probability entry points and manage risk effectively. This approach aims to generate moderate returns while minimizing exposure to significant downside risk, aligning with a prudent investment approach. Based on the historical data and forecast, ENG coin shows a slight downtrend. The RSI fluctuates around 40, indicating neither strong overbought nor oversold conditions. The Bollinger Bands are narrowing, suggesting decreasing volatility. Considering the forecast prices, which are consistently below the recent closing prices, a conservative strategy is recommended. I suggest a short-term short position with a focus on capitalizing on potential minor dips. My recommended strategy is to enter a short position at $0.0891. The stop loss should be set at $0.092 to protect against a potential upward reversal. The initial target price is $0.0867, aligning with the forecast price for April 3, 2025. If the price reaches the target, consider moving the stop loss to break even to protect profits and potentially capitalize on further downside. This strategy balances risk and reward, given the current market conditions and the forecast data. Based on the historical data and forecast, Uniswap shows a fluctuating trend with periods of both upward and downward momentum. The RSI consistently hovers around the mid-range, indicating neither strong overbought nor oversold conditions. However, the forecast data suggests a potential downward trend, with prices decreasing from 6.46 to 5.96 over the next week. Considering the support price of 5.87 and the decreasing forecast, I recommend a short position. Enter a short position at $6.46, placing a stop loss at $6.7 to protect against a potential upward reversal. The initial target price is $5.96, aligning with the forecast data. To enhance the strategy, we'll incorporate Bollinger Bands. The price consistently trading within the band suggests moderate volatility. If the price breaks below the lower Bollinger Band of $5.66, it strengthens the short signal, and the target price can be adjusted to $5.87, near the support level. Conversely, if the price approaches the upper Bollinger Band of $7.25, it signals a potential shift in momentum, and the short position should be closed, or the stop loss adjusted to $6.5. This combined RSI and Bollinger Bands approach offers a dynamic and adaptive strategy for maximizing potential returns while managing risk. Based on the historical data and forecast, Chainlink shows a slight upward trend. The price has been fluctuating between the support price of $13 and the resistance price of $17.1. The RSI indicates that the asset is currently not in oversold or overbought territory, fluctuating around the mid-40s to mid-50s. The Bollinger Bands show that the price is currently near the middle band, suggesting a period of consolidation. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the price touches the lower Bollinger Band, which is around $12.5. The stop loss will be set just below the support price at $12.8 to mitigate potential losses. The initial target price will be the upper Bollinger Band at $15.7, aiming for a quick profit. To optimize the portfolio, I suggest a layered approach. If the price reaches the initial target of $15.7, we will move the stop loss to the entry price at $12.5, securing profits and reducing risk. The second target price will be the resistance level of $17.1. If the price reaches this level, we will take partial profits and move the stop loss to a level that protects a significant portion of the gains. This strategy combines the signals from RSI and Bollinger Bands to identify potential entry and exit points, aiming for high returns while managing risk effectively. The final forecast price is $14.3, which suggests a potential for a slight upward movement. Based on the historical data and forecast, Aave shows a slightly decreasing trend with recent price fluctuations. The RSI consistently remains below 50, indicating a weak upward momentum. The Bollinger Bands show that the price is approaching the lower band, suggesting a potential oversold condition. Considering these factors, I recommend a moderately bullish strategy. We will initiate a long position at $167 with a stop loss set at $164. The target price will be $190, aiming to capture a significant portion of the recent upward movement. To refine the strategy, we will incorporate the RSI and Bollinger Band signals. If the price touches the lower Bollinger Band and the RSI falls below 20, we will enter a long position at $164 with a stop loss at $162. The target price will be $184. This strategy capitalizes on the potential bounce from the oversold condition. Conversely, if the RSI reaches 80 and the price touches the upper Bollinger Band, we will consider a short position, but given the overall trend, this is less likely. This portfolio combines both strategies to maximize returns while managing risk effectively. Based on the historical data and forecast, EOS shows a slight upward trend, bouncing between the support of $0.561 and the resistance of $0.636. The RSI fluctuating between 39.9 and 56.0 suggests periods of both oversold and overbought conditions. Considering the forecast prices, we anticipate a range-bound movement in the short term. The Bollinger Bands indicate volatility, with the price often testing the upper and lower bands. Therefore, I propose a combined strategy leveraging RSI and Bollinger Bands. My strategy involves a long position when the RSI dips below 30 and the price touches the lower Bollinger Band, signaling an oversold condition. Entry price will be $0.564. The stop loss will be set just below the support level at $0.55 to protect against a potential downside breakout. The initial target price is near the resistance level at $0.636. If the price reaches this target, we can reassess the situation and potentially set a new target based on the prevailing trend. This strategy aims to capitalize on short-term price fluctuations while managing risk effectively. Based on the historical data and forecast, Tron shows a slight upward trend. The price has been fluctuating within the support of $0.227 and the resistance of $0.244. The RSI indicates that the asset is currently not in oversold or overbought territory, fluctuating between 34.5 and 53.6. The Bollinger Bands show that the price is currently near the middle band, suggesting moderate volatility. Considering these factors, I recommend a moderately bullish strategy. We will enter a long position when the price touches the support level of $0.227. The stop loss will be set just below the support at $0.225 to mitigate potential losses. The initial target price will be the resistance level of $0.244, aiming for a significant profit. To refine this strategy, we'll incorporate the RSI and Bollinger Bands. If the price retraces to $0.231 and the RSI is below 40, we will enter a long position with an entry price of $0.231. The stop loss will be set at $0.228, and the target price will be $0.241. If the price touches the bottom of the Bollinger Band, which is around $0.213, we will enter a long position with an entry price of $0.213. The stop loss will be set at $0.211, and the target price will be $0.235. This tiered approach allows us to capitalize on potential rebounds while managing risk effectively, maximizing the potential for high returns.